Good morning, traders. It is Friday, August the 16th. Taking a look at the charts. Yesterday we had a pretty wild session. We pretty much saw money flowing out of stocks and bonds and more or less dumping into commodities. Now let's start off with the SP 500 here. You can see we got the daily chart. We had a big gap down yesterday, continued to sell off. We had some pretty strong panic selling across the market. Everybody's kind of getting flushed out of the long positions. Overall, the trend still remains up. Things could get a little choppy, very similar to what we saw back here, and it could continue to consolidate or even top out. But overall, the trend remains up, and usually these oversold conditions, when the trend is possibly changing from an uptrend to a downtrend, you still get very strong rallies back up to these previous highs, and that's kind of what we're looking for. So right now we're starting to get some orange candles here, meaning that the technicals are starting to become a little bit more mixed, and there's a higher percent chance that the trend is actually starting to reverse. Now if we take a look at the futures of the SP 500, this is the 10-minute chart, zoom back about 8 or 10 days here. You can see here yesterday we had that big sell-off, pretty strong volume. Overall, we're starting to see a little bit of a rounding formation from yesterday and this morning, but there was enough selling yesterday that I do feel as though we're probably going to see probably another 1 or 2 days of some weakness. I don't think we'll make severely new lows. I think we'll probably see prices extend down, chop around for a while, and keep pushing to these new lows. And what I'm looking for more or less is 3 surges to a new low. Usually you'll find kind of these multiple bounces, and it just kind of drags out for a couple sessions as more or less traders and investors around the world slowly get out of the position and give up, and that's when you see a sharp rebound back up into resistance. So you can see the high volume resistance up here. You get a sharp recovery back into there, and then we reanalyze how the technicals look once we get back up into a level like that. Now we are at 1659 this morning. We're up a little bit. Overall, I do feel as though there's potential to go all the way down to around the 1640, which is somewhere down around here. It's pretty low still, so we could see some continued weakness for a couple more days. And again, today is Friday. It's a pretty significant day. Hopefully we don't close on the lows today, because that would be a fairly bearish sign. We want to see some type of recovery into the closing bell, showing that there is a little bit of strength still kicking around. Now let's just take a quick look at the market momentum, and here is the momentum chart. Again, anything over the 101 we consider on a short-term very short-term basis intraday that the market is overbought. Whenever the price is up over the 101, we usually expect the next day to be a pause or a pullback, or to gap down. We look for short-term weakness. Anything below the 99, we expect the market to be oversold, and we see some type of relief bounce. So yesterday we came down, closed below the 99. Today could be yesterday was a pretty big day, so today could be almost a quiet day, as much as it looks like it could be setting up for another big move. The fact that we're so oversold, we had such a big drop yesterday, I wouldn't be surprised if overall the prices kind of stabilize, and there's kind of like deer in the headlights. We don't see a whole lot of action go on today. It'll be at minor range. We'll see how things unfold, but overall things are a little overdone to the downside, and I think we could just see a little bit of a pause today as traders kind of regroup. Now taking a look at the stocks trading over the 20-day moving average, this is a pretty good little indicator. We came all the way from oversold, rallied all the way back up, markets made new highs, and now we're actually coming right back down into this sweet zone. Pretty much anything down around this 25 area is the real sweet spot, when there's only 25% of the stocks trading above the 20-day moving average. We find the market tends to have a multi-week bounce. The fact that the market's pulling back and we're seeing it come all the way down to this level, a couple more down days should drag it right down into this level, meaning that the equities market will actually be primed for another run higher. And the fact that we had a lot of fear in the market yesterday, and that this is showing that the momentum is reloading, we could still have a very strong bounce or even new highs in the near future. But again, we'll see how things unfold in the next couple days, next week, and how strong the recovery is. Taking a look at stocks trading over the 50-day moving average, it's moving down. This is a much slower indicator. Obviously, it's a 50-day, so it's lagging. we're slowly coming down to this 50% level, and the fact that we're above it still means that we're in a very bullish market condition. Means more than right now there's 57% of stocks trading above the 50-day moving average, and as they come down near their 50-day moving average, there will be investors looking to accumulate. So the fact that we're starting to see prices come down to the 50-day, there will be people starting to nibble and buy on the 50-day moving average, which will create some support. Now taking a look, let's start off with energies. Here's the crude oil chart, the daily chart. You can see here we're trading up at resistance. It's been holding up fairly well. It's overall this pattern here is bullish. Got to move up. It's been channeling, and it's trading near the upper end of the channel. Wouldn't be surprised if it pulls back a little bit, but overall we have seen some pretty strong steady buying up at this level. It looks like it's trying to eat through some resistance. Looks as though it could start to extend, and it has potential to pop to the upside. But that being said, it's still trading at the top of its range. We'll see how it does going forward here, if it actually has some strong volume or if it actually reverses here. It looks as though it wants to probably have some type of minor pullback and maybe consolidate, chop around here for a little bit, build up some momentum or a little mini bull flag, and then possibly break out to the upside. We'll see how that unfolds going forward. Looking at natural gas, yesterday we took some of the position off in the morning and moved our stop to break even to protect ourselves. We finally got that oversold dip. Let me just zoom in a bit here. Got that oversold washout bottom we were waiting for a long time, a couple months there. Finally got that washout bottom, and we got a nice move up yesterday. Nice pop, about 2.5% up, and depending where you got out, you should have pocketed around 3.5%, 4.5%. This morning we came up, we've tagged the 20-day moving average, and it's pulling back a little bit this morning, which is a typical price action. The first time you tag a moving average, usually you'll see it pull back, and if you just take a look at previous times, now that you're in a downtrend, price gapped up near the 20, pulled back sharply. When we're in a downtrend here, hit the 20, pulled back, hit the 20, pulled back, and we hit the 20 there more or less yesterday or this morning, and it's starting to pull back. But overall, if we just zoom into a shorter time frame, let's just jump to the 30-minute chart and zoom out a bit. Overall, we've got some pretty good typical price action here. It looks a little bit of a pullback after a strong move yesterday. Key support is going to be somewhere right around here, around the 335 area. This is kind of the breakout zone right across here, and we're just kind of slowly settling back into that level. You can see here we got a high volume gap, and we're trading pretty much right at the upper end of this level. So if we can break above this 345 level, pretty much price should take off and head all the way up to the next resistance roof level here around the 365. So that's kind of what we're looking for. If it can form this rounding kind of formation, consolidate here for a while, and then have a pop, we could see it run very quickly up to the 365 area. Now taking a look at precious metals, huge day yesterday. Again, precious metals, they are starting to show some pretty good strength, and you can see here we had an extension. Gold broke this previous pivot high, so it's starting to show some higher highs, which is pretty key. And if we just zoom back on the chart here, I just want to show where we kind of stand in the grand scheme of things. Gold is coming up into some pretty key resistance. You look at this high volume, price by volume. It's pretty much right out of the 1400 level. 1400 is a whole number. It will naturally act as resistance also. I wouldn't be surprised if we come up and get a little closer to that 1400 area. I think when it gets there, it's going to get hit pretty hard. We'll probably see it pull all the way back, possibly down to this 20-day, this pink 20-day moving average. Could consolidate there for a little bit, form a little mini cup and handle. After that, you can see the next high volume resistance is going to kick in somewhere right around here, meaning that we've got this huge void in volume. And once it starts to run and break above that 1400 level, it should be off to the races to around the 1575, maybe even 1600, which is the next major whole number. And that's also where the major breakdown started to occur. So that's kind of what we're looking for in gold. It's still the real significant low. The fact that it's broken this first little pivot low is a bullish sign. It does have a higher high also. This one here is going to be a really significant level, and really if we could get a nice consolidation here sideways for a while, that would be very bullish. We could actually get in and probably have a fairly tight stop in case it does want to just continue and have another leg to the downside. But if it does pop, we'll be in place for a significant 150 $200 run up to the next resistance zone. Taking a look at silver. Silver had another huge pop yesterday. It's right up into high volume resistance, this big cluster, this blue volume over here, this major consolidation. It is up into that level. Looking a little overextended to the upside, and it is in high volume. Wouldn't be surprised if it flags here. If it could do similar to what gold is doing, chop around here, build a base, maybe pull back a little bit more, it could be setting up for a really nice move back to the upside and continue to extend. Next resistance zone will be somewhere around the 2750 area. Now looking at precious metal miners, the gold miners, big pop yesterday, and it looks as though it's trying to put in a bottom, and we've got this rounding formation possibly forming. I pointed out yesterday, possible inverse head and shoulders. You've got this kind of forming. You've got a declining neckline you could draw there, or the key resistance really is going to be more or less these previous highs that it's just starting to get up into now. And if it does continue to extend, if it can break above into these, likely we're going to see some type of pullback or consolidation eventually, and then we'll probably see it take off to the upside. But right now it's just coming into these previous highs, into some pretty major resistance, and a lot of people are piling in right at the ultimate high here for some key resistance. So usually when everybody piles in one direction and gets all excited about it, that's usually when you see a sharp pullback, and they usually get stung. But we'll see if this momentum can carry through. It really needs to break above this level, and then that will be considered more or less we are starting a new uptrend. Now taking a look at bonds. Bonds are trading lower again this morning. We're getting that nice kind of slow drag, that selling pressure down that I've been talking about here for several weeks, and it's making lower lows. You can see we've got a low, low, lower low, lower low, and what we want to see is it just continue to make these lower lows and just kind of fade out and just fall out of favor, and people give up on the play, and then suddenly we'll see very sharp move to the upside, and we'll see it take off, and that could likely be a correction in the equities market down the road. But we'll just let this kind of play itself out. It looks as though it's trying to put in a bottom, and eventually it's going to reverse, and we're going to have a down kind of neckline. We'll have some high volume resistance that we're starting to form right across here. You can see from this high volume here, once it can start to build and break above that level with some bullish volume, bullish price action, then we'll be looking to get long bonds for the next move. The next resistance zone will be here in the high volume area, the 140 level, and after that it'll be the next high way up here. So that's kind of where we stand. You got to think of the market as a more or less an apartment building. You've got floors, and you've got the floors support, the roofs are resistance, and once you're in between them, you'll ping pong around. Eventually you'll break through, you'll hit the next ceiling, you'll ping pong around. That's just kind of how the market works. So if you can think of it that way, think of high volume levels as those floors and ceilings, it really does help clarify where the price action is. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.